Good morning, everyone. Good to see you all. Thanks for being with me. Thanks for being patient last week. Good to be back. So, big ranges while I was sick. Let's go take a quick look at the daily. This, what I'm really interested in there's a couple of things. We've got this 64.87 to 66.21 area, and we keep coming back in and out of it. So right now we're 66.18. The last four sessions, it's just something that you want to keep track of. And I'm going to go a little slow today. If you look at the highs on every one of these sessions, you're going to see the highs are lower. So keep note of that, okay? So we do have sellers. We are going to have sellers here at 66.80. There is overhead inventory, right? So right there at 66.85, you can see there's a seller here, 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 there. One day he had above it. And now those sellers have moved down to this just underneath 66.60 level, right? Oh, it's our high tonight, 66.35. The previous session was 41, the previous session 45, the previous session. So they're moving lower, but that's okay because, we know that there's a whole bunch of inventory above us, and we're resetting our cost basis as we usually do in the spring. Last spring we did the exact same thing. Different news circumstance, but we were at all-time highs, going sideways, liquidated all the way down, you know. So this time we just have more inventory to clean up. This is the inventory that we've got to clean up. So the more inventory you have to clean up, even though contract is rolled over, you do have people trapped long in a lot of different um, products. I call, these things products. And, if we go and look at, you know, pretty much any daily chart of any single issue, there's Netflix, there's Tesla. Look where we are. Look how much inventory is above us. Palantir, there's inventory above us. Microsoft, there's inventory above us, right? So these stocks all have to clean out because there's overhanging supply above, okay? So when you have those kinds of situations, it's more difficult to get these huge moves up. That's why yesterday you guys were talking in chat and someone said they're short biased and I said I agree. And in fact, we did open. We opened on a pretty big move down. And that's kind of concurrent with when you get a market that moves up before a long weekend, that's all short covering. So the shorts came in on the Sunday night, got to do some covering here, right? Went into those single prints, right? If we go and look at and compress the profiles, you'll see that there's a set of single prints here. And there's a bunch of short covering here. Right back up into distribution. We're in Friday's cost basis. So it's pretty much business as usual as Friday. People got we say cheap paper, right? They've got cheap product under 65.87 they were allowed to cover. And now we're back up at 66.17. right? Yeah, so pretty much business as usual as Friday. I'm going to give you the balance zones. The session's going to be, I'm still pretty sick, but I wanted to do a session for you guys. Um, what happened was I got a virus, and when you have a bad heart, I went into arrhythmia and it wouldn't come out of arrhythmia. It was just really a pain in the butt, which, your heart's beating at about 150 beats a minute for hours at a time, so it just tires you out. So to keep that from happening, I'll keep this session short. The balance zone I did was, you guys see that as a gap down. We're still inside Friday's range, so it's not like a true gap. But there's your cost basis for the overnight down here. That's that short covering, and you'll see the point of control would have moved up now into distribution. So basically, we're taking that 65.80 to 65.89. We're taking that product and we're selling it up here, put it on sale. Notice that we came down to the 65.90 area, caught a bid, right back up, back on sale, caught a bid. So we're in distribution now. So the best trades to take, and I did a little bit of a weekend update. Hey Marcus, how you doing? I did a bit of a weekend update on Friday, and what I said was, when a market makes a big move up, a lot of traders try and catch this move, right? Which is really hard to do. How this works is, if you're a large wholesale trader and you build a long position, you sell into this move higher. So it's pretty hard to catch that as a long, right? Unless if you're a breakout trader and it breaks 65.89, you can buy it, put your stop under 65.89, and then sell into the strength of the move. If you miss that and you chase it, sometimes you can get into trouble. So what you want to do is wait until it starts, wait until it starts going back and forth and you can trade the edges of the move, right? Trading the edges of distribution is the best way to sort of mind your risk. Because when you take trades and you don't have a structural risk point, it's very, very difficult to manage your risk. So where are the trades to take? The nice trades to take are when the market dips and goes from one zone to another and then back up. That's the look below and fail. That trade, now this one would have been harder because it took a lot longer. This one's nice because it comes down under 66.09 and a half, comes back up. You buy a little, in the 10s and 11s. You're selling in the 15s, 16s, right? And then large traders can build a little bit of a long position here, use that as their out, and then sell into that strength. But it's pretty much an inventory game at night, as you guys know. You always want to sell into strength, so you can manage your risk. Make sure you take profits in this market, folks. Let's see what happens here. We've got our overnight point of control at 66.12. We got higher margins tonight. I haven't even checked my email, Moran. Thank you. Yeah, like these moves here are hard to catch. If you're trying to buy this move here, it's much better to buy this move to here for a new trader, right? What you always got to remember is just because there's a move on a chart, hindsight's really easy to say. But on these charts, these quick moves with big, big candles, they're hard to trade. So we really want to focus on this area. When it comes back over 66.10, you buy a little bit and you have a distinct place to put your stops. So you're long here, stop is here, and then you're selling into this distribution. This distribution, if it holds, will bring in buyers and bring another one, then they'll put it on sale and back. Once you get good at trading this move here, you can trade these moves and you can use that 14 as your out. As I'm sure, I think Cisco just took a long here up on that quick move. Things like that you want to look for. Uh, Once you get good at the mechanics of the trade, thanks, Howard. Once you get good at the mechanics of the trade, you can take the look below and fail of a level. You just got to be really quick, you know. And the other thing too is, so if you were buying this level here, you know, always, you know, like I was teaching you before I got sick, always make sure that you mark your sellers. So if you knew if the market came down here, came back up, you know that there's going to be a seller before 19, right? You had it marked, so you knew. So if you're buying 14, 15, you know, up at 19, there's going to be a seller, so you sell 18, right? Just common sense stuff really will keep you from getting into trouble. So there, right? Let's go mark our sellers. So if you're looking for a long, you know, say you're long at 15 or 16, right? Say you bought this little cluster here and you're using 16 as your out. Look, as soon as we get up to that area there, you know that there's going to be a seller there because the sellers always initiate at the top of the candle, right? So if you mark that off, then you have what we call situational awareness, or in common terms, you know what's going on, right? How can you make money if you don't know what's going on? Here, you know they stopped selling at 16. So you're going long 16, 17. Your stop is under here, right? So how you trade this is your stop is here, you're long here, stop here. You know that there's a seller here. So you buy 16, 17, you're selling 19. See? Do you see how the seller came right there to the tick? Everybody see that? Right? And once you get used to trading like this, you can clip in, make 2 or 3 points here, 2 or 3 points there, and you're making a living, right? You're not looking for 20 or 30 point trades that you have absolutely no idea how to manage, right? This way, once you get used to this type of trading, you can earn a living. And the other thing it does is if you're long 17 and it takes out the 16s, you're gone, right? Larger traders might want to use 15 if you can afford the risk, right? Now, a lot of people talk about, oh yeah, I can handle risk. Yeah, you can handle risk. Can your account handle risk, right? So somebody who's trading a $500,000 account can take larger trades, spend more money on business expenses, which are stops, than someone who's trading a $2,500 account. Hey, Johnny, how you doing? Right? And see, now we're all the way back down. So as we come back in, you'll be looking for bids at 16. So don't buy this candle. Wait until it proves itself and moves back up. Now, after a couple of distributions, it's probably going to have to be put on sale a little bit, right? Little bit of common sense is really, really going to help. It will really keep you out of trouble, you know? And remember, the overnight point of control is at 12. That's where the position is. So anything above that is distribution. That's why we haven't come down and broken that 12, 13 area yet. Thanks, Johnny. Any questions? I probably won't trade until I completely get rid of this virus. There's no sense losing money. Last thing I want to do is get into a position and get into a rapid heartbeat situation. Make sure everything's stable. Friday was a holiday. Thursday was the last RTH. Yeah. Was there an electronic session on Friday? Yeah, there was, wasn't there? Yeah, Thursday was the last full session. For some reason, my charting's not showing that Friday electronic session. Oh, here it is. Globex. There was no shortened Friday session, was there? Like during the day? I don't know. I wasn't even looking. Usually there is. Only Globex. Yeah. Okay. Thanks, Alexander. Yeah, I was pretty sick and tired, so I wasn't even really looking. I just did some zones and stuff. Oh, let's see what we got here. So you see we've got a little bit of a distribution balance here, right? We did find those bids at 16, 15. So if you came in and say you were buying, say you bought 17, right? And you know that there's a seller at 19 and 3/4. Go sell 19 and a quarter, right? You have to manage your expectations for the market that you're trading. Now, if you're a larger trader and you're building a long position here, waiting for London to open in 10 minutes, you want to sell into this strength. Look at that. There's a short cover. And you can see that where I put the white lines are exactly, hello. I would have sold into that. I would have been gone. My orders would have already been in. So I didn't know that that was going to happen. But it's funny that I was going. If you were building a long position here, you'd put your sell orders out. So when the market goes up, it takes you out of your position. Must have been some news, right? Must have been a little bit of news and somebody came in to cover their short. Right? That is a short covering candle if I ever saw one. And once again, you guys know that, you know, don't trade without stops. This market with its news cycle, I have no idea what's going on news-wise right now either. I was just reading the Wall Street Journal before the session. But pre-London, that's somebody coming into short. They didn't take your sell? That's weird. Yeah, unfortunately, in the brokerage business, just because you have a sell order at a price doesn't mean you're guaranteed a fill. Let's see. Nice work, Trade Maker. Well done. Yeah, that's a pretty big candle. 19 to 32. 33. If we take the overnight high, it's going to trigger some stops. It's definitely going to run some stops. And the high of the second is all the way up here at 44 and a half. Let's see. See how unpredictable this market is. You know, and it's probably a good thing that margins are higher. Keeps a lot of people out of trouble. And if we retrace, you look for support at 22 and then down at 19 and a half. So if you're short, say you're short this move on the backfill, right? You take markets up to create demand, you move them down, and you move back to fill in that demand with supply. That's how you distribute, right? So if you're short the backfill, you'll be putting some bids in here just at that 22 level, 22, 23. If it breaks that, we'll come back down to the 19 and a half level. I'll hang on a little bit, see how London opens up in 6 minutes. And then this afternoon I'll do another session, kind of get back into our usual mode. Hey, thanks, Bram. I really appreciate it. Oh yeah, are they closed today as well? You know what, Hoff, I'm uh, I'm thinking that London wouldn't be closed for 4 solid days. Did they close their markets for 4 solid days? Because you can't do that in the U.S. You can't have your markets closed for more than 3 days, right? It would probably be more psychological then. Really, they get. Oh, I didn't know that they closed for 4 days. I keep forgetting about that. Hey, Raj. Oh, okay. Because I know in the States it's a big deal to close your market for more than 3 days. It's generally a big no-no because people will freak out. Yeah, you're right. So it's more psychological. And maybe that's why we saw that big short covering move before 8 o'clock. Maybe, Alexander. I'm not really sure. I haven't traded AIM stocks for, oh God. Well, I never traded AIM. I just sold on AIM. You know, I was never really a trader. I was always a liquidator. So whatever I did, I was always, just selling, 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 selling. That's my whole. Yeah, there's that 22. So Yeah, we came right back down to that 22, and we're catching a few bids. Not a huge amount of movement up. Let's see if it slows down or speeds up. Give it another couple of minutes. So pretty much the takeaways, and we'll see how things start to pan out this week. I'll do a little bit more watching, start dipping my toe back into trading here in the next day or two. You can see that there's a seller at 25, right? Let's see if we can clear that seller out. See, they sold there before, right? So they'll sell there again. Size traders will always sell in the same place that they did before, generally. Unless they see like that big green candle, that's an invitation to move your offers up, right? So the way these markets are structured and the way they're built, if you had sell orders here, they would adjust electronically, automatically as the market moved higher, right? You'd see that order book thin out, and then they'd start selling into it into the 30s, which is exactly what happened. But it happens so fast, way faster than a human can trade. Let's see if we can clear that 25 there. Watch the offer lift. And we're going to open, as I say, the London Open, which is kind of a holiday open. Let's see. See how the seller's still there? It's amazing how much information a 1 minute candle chart will tell you if you're a scalper or a short term or a day trader. You really want to make use of it. It's the most simplest, easiest way to see order flow. You do, Matt? That's cool. I don't right now. There we go. Offers lifting as this L period opens up. Thanks, AZS. So usually when London opens, it shows us where the bid is. Usually London opens and moves lower. Now London's on holiday. Let's see if that still happens. So London will usually open, move lower, find the bid, right? Because in trading, large traders, what they do is they always short a market down to the bid and cover. Once they hit that bid and cover, they'll flip and go long. That's the way it's worked for centuries, right? So see, it's kind of moving, kind of creeping lower. And as soon as they find that bid, so say you're short a stock at $6 and you're short 6 and it breaks 5, right? And it, goes to like 470 and it like hits a wall. It can't break 470. Then you cover and flip and go long, right? That's how traders have been trading for centuries. You always find the bid. Now let's see if that 22.5, 22 bid's still there. If that breaks, we're going to come back down to 19.5. So even though it's a holiday in the UK, the mechanics are still the same, right? London opens at 25, sell, 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 go find where the big buyers are and stop. Oh, thanks, Alexander. Give it a few more minutes. Thanks, everyone, for your patience last week. We'll be back at it this week. For my coaching students, I will start coaching sessions tomorrow. I'm still going to take another day off from one-on-one coaching. Just so you know, I'm still not 100%, and I don't want to stress out the old ticker. So I'll start coaching again tomorrow, and I'll make up the time with you guys. It's going to get a little slow here. Thanks, Martin. Alrighty, my friends. I'm going to shut her down a little here. Thanks, TradeMaker. And we will see you later on this afternoon. Appreciate you guys. Have a wonderful trading day. Please trade smart, and we'll see you a little bit later. Thank you, everyone. Bye for now.